The Stock of the Day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
Now today we're actually going to focus on the supermarkets. That'll be Woolworths, Coles and Metcash. Now this comes after the competition regulator, the ACCC's year-long inquiry found that Woolies and Coles wield too much power, but it stopped short of recommending divestiture. The final report by the consumer watchdog makes 20 recommendations after finding Aldi, Coles and Woolies are some of the most profitable supermarkets in the world. And Woolworths has responded in a lukewarm way, saying the recommendations are in part, so we're saying we welcome the recommendations that improve transparency for customers where they don't have unintended consequences or increase costs. Coles believes Australia's grocery sector is highly competitive and is evolving rapidly and offers consumers greater choice than ever before. It points out that it's not only competing with traditional supermarkets, but also the multinational players such as Aldi, Costco and Amazon, which have established their businesses here and expanding their market share. Recommendations to improve competition include mandatory online price publishing, clearer pricing practices and stronger supplier protections. So let's see what our experts feel. Well, certainly the market liking what they hear because, of course, no punitive action as such. Look, I mean, Adam, they were never going to break them up, were they?
Well, I mean, look, there was certainly talk of, that they have too much dominance in the market. And so I think that's certainly something that you would potentially see as a way to, unstrangle the hold that especially Woolies and Coles have over the market. But yeah, I think you're right. There wouldn't be any real major disruption to that. They did say in some of the end of those statements that, the prices might have to rise because we've got more compliance or we're going to have to do more things. So it's probably not what the market wanted or what investors wanted, or as well as then the shoppers wanted as well. I think inside of that, Woolies looks probably the best one placed. So Coles has had a really good run, but we've seen Woolies, getting a really good tick up there. And I think Woolies is probably the best placed to take advantage of that upward momentum or that positive momentum that now the ACCC has come out and sort of given those recommendations. But it was pretty weak, let's be honest, as far as those recommendations, and they really didn't do too much. And I think it's a bit of a sigh of relief for the supermarkets, who, especially Woolies, has definitely underperformed over the last sort of 6 months or so.
So you're buying Woolies at this point?
Yeah, today I'll continue to keep buying it. I think that's probably the better one placed. I'm not a fan of Metcash being the number 3 player in the market. You always want to be in the quality ones. Coles has already had a good run, and so I think Woolies is best placed in the value side of things.
Okay, so buy for Woolies and holding the other two, or just not interested in Metcash?
Hold Coles, not interested in Metcash.
Yeah, fair enough. Jun Bei.
Look, I agree. I would put Woolworths on a hold for now. Look, I think it does look like a share price has underperformed a lot and has been sold off a lot in the last few weeks because of worry of what might come out of this review. And the review, exactly as Adam said, there's really nothing in it. So we're having a bit of relief rally, but looking at what those supermarkets are offering you, they're not exactly that cheap. So Woolworths, just looking at their earnings, it's 22, 23 times next year. And next year, consensus or analysts are expecting quite a lot of growth for these names. And when I speak to the analysts, many of them have mentioned that they're probably is a little bit too bullish. Double-digit earnings growth come from both supermarkets in the next 12 months. It seems quite an aggressive assumption. Even if the competition that sort of abates. So I do think that they look a little bit more expensive. It's defensive in the current environment, but I think the earnings probably, especially in the terms of in Woolworths, there might be still a little bit of earnings downside, so the analysts need to bring their numbers down. I'll put it on a hold for now.
Okay, so what, a hold on Woolies and Coles, a hold also?
Yeah, so I'll put a hold on both Coles and Woolworth.
Yeah.
Metcash is something that actually I probably wouldn't have a hold. I'll probably put it on the it's a to watch list, because Metcash is interesting. The supermarket is quite resilient, and it's even though things hasn't been great, it's been resilient. But it's the market, it's the turn of the housing market, because their total tools business is very linked to that. So I think that's coming, and that's a potential buy. But look, there's probably still 6 months too early.
There we go. There are our stocks of the day, the major supermarkets.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at ig.com.